Listen carefully, because what I'm about to share could be the difference between watching history happen and profiting from it. Francis Hunt just put together the pieces of a puzzle that has been sitting in plain sight for decades. And when you see the complete picture, you'll understand why silver isn't just going up. It's about to explode in a way that makes every previous bull market look like a warm-up exercise. Welcome to Boring Currency, where we cut through the noise and bring you the hard financial truths that matter to people who've actually built something in this world. Now, if you're over 50, if you've spent your life working, saving, and trying to do things the right way, I need you to do something for me. Hit that subscribe button right now. Not later, not after the video, right now. Because the information I'm sharing today isn't going to wait for anyone, and neither will the markets. And drop a comment below. Tell me where you're watching from, Texas, New York, somewhere overseas. I read every single one, and I want to know you're part of this community because we're all navigating these waters together. Here's something most people don't understand. The real story in precious metals is not being told by the price of gold or the price of silver. It's being told by the relationship between them. Think of it like a rubber band that's been stretched further and further for decades. The gold to silver ratio, how many ounces of silver you need to buy 1 ounce of gold, has been distorted, manipulated, and pushed to levels that simply can't hold. Francis Hunt calls this the contagion stage. And if you don't know what that means, pay attention because this is where things get real. For years, this ratio sat at absurd levels. We're talking 126 ounces of silver to buy 1 ounce of gold. To put that in perspective, throughout most of human history, that ratio was nowhere near those numbers. Ancient civilizations saw ratios between 8 to 1 and 15 to 1. Even during modern manipulation, we rarely sustained levels above 30 to 1 for long periods. But in recent years, we've been living in fantasyland, watching silver get crushed relative to gold in ways that defy both historical norms and economic logic. But Hunt noticed something critical. The ratio broke below 65. Not just a little dip, a clean break. And in technical analysis, when you break major support levels like that, you're not just seeing a correction. You're witnessing the beginning of a reversal that could reshape entire markets. Let me teach you something about market structures. Hunt identified what's called a head and shoulders pattern on the gold to silver ratio chart. For those who don't speak technical analysis, imagine a mountain range with 3 peaks, the middle peak being the highest. That's your head. The 2 smaller peaks on either side are your shoulders. When a pattern like this completes and breaks down, it's not suggesting a gentle decline, it's forecasting a collapse. Hunt's charts show this ratio could plunge to 32, but he's not stopping his analysis there. He believes, based on decades of pattern recognition and understanding market psychology, that we could see single-digit ratios. Let's do some simple math together. If gold trades at $3,000 per ounce and the ratio drops to 9 to 1, silver lands at approximately $333 per ounce. Now, before you think that sounds impossible, remember something crucial about bull markets. They don't stop at logical levels. They overshoot, dramatically. Hunt uses a phrase that should be carved into every trader's desk. You might plan to run to $300, but end up going to $1,500 or even $2,000. This isn't hype. This is what happens when markets that have been compressed for decades finally break free. Think of it like a pressure cooker. You can keep the lid on for years, keep building pressure, keep suppressing the inevitable. But when that lid finally blows, it doesn't ease off gently. It explodes with force proportional to how long and how hard it was suppressed. Here's where most people destroy their own wealth. And Hunt knows this better than almost anyone. It's called the law of the parabola, and it's the reason why smart people make foolish decisions at exactly the wrong time. Picture an exponential curve. It starts slow, builds gradually, then suddenly shoots almost vertical in the final stages. Hunt has studied these patterns for decades, and he's discovered something that most investors learn the hard way. In parabolic moves, roughly half of all your gains come in the final 5 to 10% of the move. Read that again. Half of your profit in the last few weeks or even days. What does this mean in practice? It means when silver hits $100, most people will sell. When it pushes to $150, the smart money will take profits. At $200, everyone who's left will be patting themselves on the back thinking they nailed the trade. And then they'll watch in absolute horror as silver rockets to $500, $800, $1,200 without them. Hunt explains it like this. All of a sudden, everyone thinks silver is god money and reacts too much. That overreaction is where the real money gets made. But you can't capture it if you've already sold out trying to be prudent. This is the psychological trap that ruins traders. They confuse being careful with being early. They exit positions out of fear disguised as wisdom. They sell strength because they've been conditioned to think that anything going up must eventually come down, so better take profits now. But Hunt's teaching something different. In these once-in-a-generation moves, conventional wisdom becomes conventional failure. Every single day, Hunt hears the same question, and maybe you're thinking it right now. Is it too late to buy? Here's how Hunt answers that question, and it's brilliant in its simplicity. He asks, if something is going to $1,200, does $82 seem like too much to pay? Suddenly, the math gets very clear, doesn't it? People agonize over whether to buy at $80 or $90, waiting for some perfect pullback that may never materialize, while completely missing the bigger picture. They're focusing on entry precision while ignoring directional certainty. Think about it differently. Imagine you're in 2003 and someone tells you gold is going to $1,900. Would you refuse to buy it at $400 because you wanted to wait for $350? Of course not. But that's exactly what silver investors are doing right now. Hunt addresses another concern that keeps people paralyzed. When you're looking at monthly charts, everything looks extended. There's no obvious dip, no clear entry point, just what appears to be a runaway train you've already missed. But Hunt teaches multiple time frame analysis. Here's what that means in plain English. While the monthly chart might look like it's gone vertical, when you zoom into the daily or even hourly charts, you find pullbacks constantly. Mini corrections that happen inside the larger trend. Those are your entry opportunities. Hunt pulls up his actual trading platform. Not theory, not backtesting, but real trades with real money. He shows Bitcoin, gold, silver, all climbing. And he points to specific moments. I put on 2 entries. I set stop losses here and here on what we call the relative lows. This is the HVF method, Hunt's proprietary approach. And it's working. Those stop losses, they're now locked in profits. We're looking at about 150% gain there, about 305% there, and we're still holding, he explains. This isn't luck. This is strategy. This is understanding that volatility creates opportunity rather than danger. Every time silver dips $5 or $10 on a daily chart, that's not a warning sign. It's an invitation. But most people miss these entries because they're stuck staring at the wrong time frame, convinced they're too late while professionals are finding 5 different ways to get in. Now we need to talk about something that changes everything. Something so critical that once you understand it, you'll realize this isn't just a bull market, it's a supply emergency. Hunt shows a chart going back to the 1960s, tracking how silver has been systematically suppressed. But here's what's terrifying. The reason for that suppression is disappearing, and most people haven't even noticed. Throughout history, silver prices stayed low because there was abundant above-ground inventory. Physical silver sitting in vaults could be mobilized to crush rallies, suppress prices, and maintain control. But Hunt drops a bombshell that should wake up every investor. Everything says that if you don't keep it in a safe inside the borders of your own country, you don't have it. Translation? Most of that inventory doesn't exist in accessible form. The suppression advantage is gone. The safety net has vanished. And when the world realizes this, we're not looking at a price increase. We're looking at panic, but it gets worse, much worse. Here's a fact that will blow your mind. 60 to 70% of the world's silver comes as a byproduct from mining other metals. Let that sink in for a moment. Most silver isn't mined by silver miners. It's left over from zinc operations, copper extraction, gold mining, lead production. Only 30 to 40% of global supply comes from miners who actually went into the ground specifically looking for silver. Why does this matter? Because it creates a supply crisis that cannot be solved by higher prices. Normally, when commodities rise, producers respond. Oil goes up, more drilling rigs activate, copper surges, more mines open. But silver? Different story entirely. If you're a copper mining operation, and your primary target is copper, you don't suddenly accelerate extraction just because silver hit $100. You're there for the copper. The silver is just bonus material, byproduct revenue. As Hunt puts it, they don't care as much about the waste. They're going down to get iron ore, zinc, gold, copper, or something else. This creates an impossible equation. Demand is about to explode, but supply cannot respond, regardless of how high prices climb. Now let's talk about why demand is about to go absolutely parabolic, and why most analysts have completely underestimated what's coming. The world is being pushed, whether we like it or not, into a future that runs on electricity. Electric vehicles, solar installations, smart grids, electronic infrastructure, everything requires silver. Hunt calls it the iPad everything, a world where every device, every vehicle, every system is essentially a rechargeable battery with electronic components. But here's the development that changes the entire game. Solid-state batteries. These aren't your grandfather's car batteries. These are technological marvels that can power a vehicle for 900 kilometers and recharge to 80% in 8 minutes. They're going to revolutionize electric vehicles, making them finally competitive with combustion engines on every metric that matters to consumers. There's just one problem. They require enormous amounts of silver. Hunt delivers the death blow to the supply equation. Those highly superior batteries would need 100% of the silver that is currently being made. Read that carefully. 100%. Just for batteries. That's the entire global production of silver gone, absorbed by a single use case. What about solar panels? Each one requires silver paste for conductivity, and the world is installing them at record pace. Sorry, no silver left. What about electronics? Smartphones, computers, medical devices, military equipment? All need silver. Too bad the battery industry took it all. What about industrial applications, weapon systems, communications infrastructure? Doesn't matter. There's none left. The supply-demand equation isn't just broken. It's shattered beyond recognition. We're entering a world where silver demand could be 5, 10, maybe 20 times current production, and there's absolutely no way to quickly increase supply. You can't just open a silver mine overnight. It takes years of exploration, billions in capital, complex permitting, infrastructure development. And even when you could do all that, Hunt points out another problem. It hasn't been possible to make money from them because making a hole in the ground to get silver takes too much energy for the price that's being offered. Silver has been too cheap for too long. The market has been screaming this message through the gold to silver ratio, through the lack of new mine development, through the depletion of above ground stocks. And now, finally, the market is about to correct that decades-long mistake all at once. Hunt isn't predicting a normal bull market. He's forecasting a supply crisis of historic proportions where price becomes the only mechanism to ration demand. And when price is the only tool available to balance supply and demand in a market this tight, the numbers get shocking very quickly. So we've covered the technical setup, the supply crisis, the demand explosion, the entry opportunities. Now comes the hardest part, the question that separates people who build generational wealth from people who tell stories about the fortune they almost made. When do you sell? Hunt tackles this head on because he knows this is where emotional discipline either makes you rich or leaves you with regrets. When should I sell my silver? It's the question everyone wants answered, but most won't like the answer because it requires patience that most people simply don't have. Hunt's approach is clear. The exit signal will come from the gold to silver ratio, not from the price. Not when silver hits some round number like $100 or $500. Not when your gut tells you it's time. The ratio will signal the turn. When that ratio collapses into single digits, and Hunt believes it will, that's when the final phase begins. That is when fortunes are truly made or brutally lost depending on who has the discipline to hold and who panics into selling too early. Remember the law of the parabola? Half your profits come in that final stretch. But here's the psychological warfare you'll face. By the time silver reaches $200, $300, $400, every instinct will scream at you to sell. The financial media will declare it a bubble. Your friends will call you greedy. Your family will beg you to be sensible and take profits. You'll watch 15 and 20% corrections and convince yourself the top is in. But Hunt warns those pullbacks are gifts, not warnings. They're opportunities to add, not reasons to exit. We only do a partial close of about 50% most of the time, he explains. This is how professionals operate. They take some profit to remove psychological pressure, but they let the core position run to capture the full magnitude of the move. Hunt has his initial target at $333, but he's crystal clear. That's not the high. That will be a place to rest for a while. A consolidation zone where weak hands capitulate and strong hands accumulate before the final surge. We expect to do better than that. Much better, Hunt states. But then he says something that should make everyone pause. At that point, I don't know what the dollar means. I'm not sure what kind of money will be used at that time, if it's still a dollar, a digital dollar, or something else. This isn't just about silver appreciation. This is about potential monetary system transformation, possibly collapse, possibly complete replacement with something new. In terms of old money, the currency we understand today, Hunt projects 4-digit silver, $1,000, $1,500, $2,000, maybe higher. These aren't wild guesses. These are mathematical projections based on supply constraints that cannot be solved, demand explosions that are already underway, and monetary instability that's becoming impossible to ignore. Hunt shows one final chart that ties everything together. It's a quarterly structure going back to the 1950s. 75 years of data showing what he calls a squeeze inside a squeeze. Imagine a coiled spring compressed for 3/4 of a century, energy building, pressure mounting, tension increasing year after year after year. That's what's happening in silver. When squeezes stop, Hunt explains, prices don't go up, they explode. The technical breakout is confirmed. The momentum is building. The contagion phase has arrived. Everything is aligning in a way that Hunt has spent his entire career learning to recognize. His message to silver holders carries both hope and warning. Hope, because the setup is pristine, the move has started, and those positioned correctly will witness wealth creation on a generational scale. Warning, because the real gains haven't even begun yet, and selling too early will haunt people for the rest of their lives. Past silver bull markets teach us that endings are violent, not polite. The final stage will spike brutally, pull back sharply, spike again, and just when everyone believes it's heading to $3,000, it will reverse hard and fast. But that day isn't today. Not this month. Probably not this year. Hunt sees this as a multi-year transformation that will completely reshape precious metals markets. His final piece of wisdom is both simple and profound. The markets want to love you and give you gifts. All you have to do is bend over, open your eyes, and pick them up. Those gifts are the pullbacks, the temporary moments of doubt, the times when you can add to positions while others panic, the opportunities that hide inside volatility. Francis Hunt has laid out the complete picture, technical analysis showing the breakdown, supply crisis proving physical scarcity, demand explosion from technologies that can't function without silver, entry strategies using multiple timeframes, exit frameworks based on ratio analysis instead of emotional price targets. Now the question becomes personal. What are you going to do with this information? Will you have the courage to buy what seems expensive today but will seem absurdly cheap tomorrow? Will you have the discipline to hold through inevitable volatility and capture the full magnitude of this move? Will you have the wisdom to ignore the crowd when they're screaming at you to sell? Or will you be like most investors, looking back in 2 years, kicking yourself, saying, I knew silver was going higher, I just didn't have the conviction to act on it. The choice is yours, but understand something clearly. The clock is running. Silver doesn't pause to wait for anyone. The train is leaving the station. The only question is whether you are on board or watching from the platform as it accelerates toward a destination that will seem impossible until it arrives. Francis Hunt has given you the roadmap. The analysis is complete. The opportunity is clear. What happens next is entirely up to you. Now, I want to hear from you. Drop a comment below and tell me, what do you think about Hunt's silver analysis? Are you buying more here? Are you holding what you've got? Or are you still sitting on the sidelines trying to decide? And if this video opened your eyes to what's actually happening in the silver market, hit that like button, subscribe to Boring Currency, and turn on those notifications. The financial storms ahead are just beginning, and I'll be here to guide you through every single step. See you in the next one. Stay safe, stay informed, and most importantly, stay positioned for what's coming.